So let's start. So as I told yesterday we had already completed investment appraisal. Today we will be discussing about working capital. Okay. So let's discuss about working capital. First of all, what do you mean by the term working capital? Anyone else? Can anyone tell me what do you mean by the term working capital? You can unmute and tell me. Anyone can unmute and tell. What do you mean by the term working capital? The more
The
you respect
capital,
the capital,
the capital used for day-to-day operations.
the capital used for the day-to-day operation. For the day-to-day functioning of a company, we do have initial investment. Apart from that, for the day-to-day operation, we need a certain amount of money. That money is called working capital. Okay, that money is called working capital. In working capital, as per our Kaplan textbook, how many chapters are there? How many chapters are there in working capital as per our Kaplan textbook?
Four chapters.
4 chapters. Yeah, there are 4 chapters. There are 4 chapters. And how much marks can you expect from working capital?
26.
Yeah, 20 to 26. It will be around 20 to 26. You can expect a minimum of 20 marks and a maximum of 26 marks. There can be a question in working capital can be tested anywhere. Either it can be asked in session A, session B, and session C. In session C, there will be 2 questions. One will be surely from investment appraisal, and the second question will be from either from working capital or from business finance. Okay, there are 2 probabilities. One question should be always from investment appraisal. The second question can be from working capital. It can also be from business finance also. So as I said, there will be a question in session C. Apart from that, you can expect question. Most probably, there can be a question. Okay, not sure. There can be a question in section C. Apart from that, you can also expect MCQ questions. Maybe around maximum 3 MCQ questions can be tested from working capital. So you can expect a maximum of 26 marks from working capital. So as you said, there are 4 chapters. Okay, there are 4 chapters. In your Kaplan textbook, you can find that all the chapters which comes under the topic working capital will start with the working capital only. Okay, the name of the chapters will be like working capital management, inventory, working capital management, receivables, working capital management, cash. So all the chapters which are under working capital will have the name working capital. So what was the first chapter from working capital? What was the first chapter from working capital?
Under
It's some
working capital.
yeah, it's something called the overall working capital. It's working capital itself. Okay, overall, what do you mean by the term working capital? What are the working capital ratios? What are the equations? What are the different working capital cycle? How we should invest in working capital? How we should finance the amount in working capital? Everything will be discussed in the first chapter itself. Then on the second chapter, we will further discuss about some more topics called what was being tested in in second chapter. What was
Inventory control.
Inventory.
yeah, inventory management. Second chapter was about inventory. Second chapter was about inventory. Okay, inventory is also part of working capital. The amount we invest in inventory is also called working capital actually. So anyway, inventory. Then next chapter was
Receivables and payables.
receivables and payables. It's receivables and payables, right? The second chapter was receivables and payables. Today I'm getting more and more responses. I'm really happy that you respond. Okay. Anyway, next one. Next chapter is about
Cash and funding strategies.
cash and funding strategy. Next chapter is about cash and funding strategy, or else I would say cash management. Okay, so there are 4 chapters in working capital. Number 1 was the overall working capital management. Number 2 was about inventory, where you will be learning about EOQ, just-in-time stock management, everything. And number 3 was receivables and payable management, and number 4 is cash management. So, as my experience, since my experience is concerned, if you ask me which is the most difficult question in session C, I would say it will be the question of receivable management. Till now, if you ask me which is the most difficult area students mostly feel difficult with, are the questions from receivable management. Okay, in our normal sessions, since this is only a revision session, for our normal sessions, I used to do more questions regarding receivable management. Okay, we do more questions from receivable management so that our students they will feel easy to grab that idea. So anyway, receivable management question is one of the most important question, not most important one, I would say. It's one of the most toughest one. Okay, and then we do have the cash management. Anyway, we'll discuss about the topic that will be tested in the first chapter, can be tested from the first chapter. Okay, so I would say, as you told, working capital. The term working capital means it's not the initial investment. Apart from the initial investment, for the day-to-day operation of a company, we need a certain amount. That is what called working capital. That is what called working capital is, right? So then let me ask you, there is a term called cash operating cycle. Cash operating cycle. So could you please tell me what do you mean by the term cash operating cycle? Can anyone tell me what do you mean by the term cash operating cycle? Anyone can, it's an open question. Anyone can tell me whether you, let me check whether you can answer it or not.
The cash operating cycle is the number of days between suppliers and receiving cash from the sales.
Yeah, it's the number of days in which we pay. It's a number of days between the day in which we pay the suppliers and the day in which we receive the same amount from our customers. Okay, it's a number of days. Okay, it's a time period where we pay, time period between where we pay the supplier and we get the same cash from the customer. It's a time period. So cash operating cycle is also having another name. What is the other name for cash operating cycle?
Working capital cycle.
Yeah, working capital cycle. Cash operating cycle is also known as working capital cycle. Okay, then let me ask you, what was the equation to calculate working capital? Yeah, the investment in working capital of a company, the working capital requirement of a company. How can we calculate the working capital requirement of a company?
Current asset minus current liability.
Current asset minus current liability. That is what the equation for calculating working capital. So what are the current assets in a company? Current assets.
Receivables plus cash plus inventory.
Receivables plus cash plus inventory, we will get the current asset total figure. Then for current liability, we can say
Payables, overdraft. Like
payables, overdraft. Okay. So if you deduct the current liabilities from the current asset, you will get the investment, working capital requirement. Or else we can say working capital is also known as the investment in current assets. Okay, working capital is also known as the investment in current asset. Anyway, then we discussed about cash operating cycle, or else we can say it's also called working capital cycle. So it's the number of days between paying the supplier and receiving the cash from the customer. It's a cycle, right? Anyway, you have to learn how to calculate cash operating cycle. What was the equation to calculate cash operating cycle?
Receivable days plus inventory days minus payables days.
Yeah, receivable days plus inventory days minus payable days, or else we can say receivable collection period and the inventory days and payable payment period. Okay, inventory holding days and payable payment period. You can add receivable days plus inventory days minus payable days. The inventory days or else inventory holding period is further divided into 3. Which are they? Inventory holding, finished goods days. No, you have to, if you are telling, you have to tell me by, if you are collecting inventory, then inventory cannot be like finished goods always. It will come as what?
raw material.
It will come as raw material. Then
Work in progress.
Work in progress. And finally,
Finished
finished
goods.
goods. So inventory days are further classified into raw material days plus work in progress days plus finished goods days, right? Okay, that is what inventory days is. So if you add receivable days plus inventory days minus payable days, you will definitely get cash operating cycle. Okay, so could you please tell me what is the connection between cash operating cycle and investment in working capital? There is actually a connection which can be tested as a theory question. There can be a connection between cash operating cycle and investment in working capital. What can it be? Will cash operating cycle and investment in working capital will go up and down? Okay, at some situation. So what is
cash operating cycle increases, working capital increases like
okay,
like that.
Okay, cash operating, if cash operating cycle gonna increase, working capital, the investment in working capital will also increase. If cash operating cycle gonna increase, we should invest more in working capital. Okay, if a company has has much more lesser what cash operating cycle, we need to invest only lesser money in working capital. Anyway, that's the relation between cash operating cycle and investment in working capital. Anyway, you have to learn what is the equation to calculate receivable days, inventory days, and payable days, everything. Okay, it can be tested as in weeks, months, etc. Anyway, next thing you have to study here is what do you mean by the term over trading? What do you mean by the term over trading? There is also over capitalization, but I'm not considering it. What do you mean by the term over trading? Anyone?
Where the working capital is too low.
Yeah, where the working capital is too low. We are keeping the working capital low, but we are trying to increase the sales using funding from current liability. Yeah, very good. From funding from current, if you are using funding from current liabilities and we are doing business and we are increasing our sales, that is what called over trading is. Over trading do have some certain symptoms which you definitely need to study. What are the symptoms of over trading? So let me ask you, what will happen to current ratio and quick ratio if there is over trading? Current ratio and quick ratio will, if it is over trading, current ratio, quick ratio will increase or decrease?
Current ratio and quick ratio will increase.
Current ratio and quick ratio gonna increase? No, actually, it's not gonna increase. Current ratio and quick ratio gonna fall. It's it will come down. Okay, because our current liability is increasing. In current ratio and quick ratio, our denominator is what? Our denominator is what?
Current liability.
Current liability. Current liability gonna increase if it is over trading. Then definitely current ratio and quick ratio gonna fall, right? Okay, definitely current ratio and quick ratio gonna fall. So let me ask you, what was the equation to calculate current ratio?
Current asset divided by current liability.
Current asset divided by current liability. Okay. What was the equation to calculate quick ratio?
Current
Current
asset
asset
minus
minus inventory by current liability.
Current asset minus inventory divided by current liability. In both cases, if it is over trading, current liability is gonna increase. Current
increase.
liability is gonna increase. If current liability is gonna increase more than current asset, definitely this ratio is gonna fall. Okay. If denominator increases, ratio any ratio will fall. Okay. So current ratio and quick ratio gonna fall only. Okay. That is what current ratio. Could you please name another name for quick ratio?
Asset test ratio.
Yeah, quick ratio is also known as asset test ratio. Okay, fine. Anyway, you have to learn what do you mean by current ratio, quick ratio. It's not only important in current ratio and quick ratio are not only important in financial management. In some other papers also, it's important. So you have to learn what do you mean by the terms current ratio, quick ratio, everything. So that is what over trading was. That is what over trading was. You have to learn the symptoms. Never forget to learn the symptoms. Anyway, then I can tell you, you have to learn also over capitalization. You also have to learn what do you mean by the term over capitalization. Okay. Anyway, I would like to tell one of the most important theory that can be tested from working capital. It's nothing but working capital investment policy and working capital financing policy. Working capital investment policy and working capital financing policy, right? Okay. For a company, they will have investment policy and financing policy. What do you mean by the difference between investment policy and financing policy? The term itself. Investment means how much you have to invest in working capital. That is what being tested in investment policy. Financing policy is what? How we will finance working capital, like whether we should use short-term finance or else we should use long-term finance. Everything will be discussed in financing policy. Okay. Investment policy means how much. Financing policy means whether it is from short-term finance or long-term finance, right? Investment policy, like whether we should invest this much money. That is what investment policy means. Financing policy means whether we should take the money from short-term capital or long-term capital. Okay. Anyway, even if it is investment policy and financing policy, a company can have three approaches. A company can have three approaches. That is the only similarity between investment policy and financing policy. So what was the three approaches a company could have?
Approach.
What?
Aggressive.
Aggressive approach. Really good. Next one. Kindly unmute and say, everyone. Aggressive approach.
Conservative matching. Moderate.
Conservative approach and moderate approach. Okay, those are the three approaches in both investment policy and financing policy. But the three approaches in both investment policy and financing policy are entirely different. Okay, we cannot say that the same. It's the same. There are difference in these three approaches for both investment policy and financing policy. You have to learn that. For our regular students, they will be knowing the difference between conservative approach, aggressive approach, and moderate approach. Anyway, that's it from the first chapter. For the second chapter, you have to learn about inventory management, how we can manage inventory. Okay, so what was the most important topic from inventory management? What was the most important topic from inventory management? Okay,
EOQ.
It's what EOQ. EOQ is economic order quantity. Okay, EOQ is nothing but economic order quantity, right? Economic order quantity. So let me ask you an MCQ question. Okay, you have to tell me, and I will be asking an MCQ question. You have to tell me. Okay, so holding cost will be the least in EOQ. Is it true or false?
No.
Holding cost will be
False.
it's false actually. Okay, holding cost will be the least in not EOQ. It's not in EOQ. Holding cost will be the least in what? JIT, just in time stock management, right? There we don't stock anything. Holding cost will be the least in JIT only, not EOQ. Then let me ask you one more question. Ordering cost will be the least in EOQ. Is it true or false?
False.
False. It's also false. Ordering cost will not be the least in EOQ. Ordering cost will be the least when we order the entire demand at once. Okay, if we order the entire demand for an year in a single order, we will incur only ordering cost only once. Okay, that is where you will be having the least ordering cost. Okay, so ordering cost cannot be the least in EOQ. Holding cost also cannot be the least in EOQ. But together, both holding cost and ordering cost together, if you ask me, which is the time when ordering cost and holding cost will be the least, that is what EOQ. Together, if they can be the least, where it can be the least, that is what called EOQ, economic order quantity. Okay, so always remember, holding cost is not the least in EOQ. Holding cost will be the least in JIT only, not EOQ. Okay, think that way. You have to think the logic of everything. Otherwise, they will they will try to mislead you. Okay, they will try to mislead you. Since I have done it was like a misleading question, right? So they will also try the same. So you have to stick on to the logic. You have to stick on to the basic idea. So even if they ask something else, you can answer it correctly. Okay. Anyway, so EOQ. Then what was the most important topic? There is actually a discount in inventory. What is a discount called in inventory?
Settlement discount.
What is a discount called in inventory? Wait, something has happened to my screen.
Bulk purchase discount.
Yeah, it's called bulk purchase discount. Guys, something had happened to my screen. Let me. Yo. I think there is some problem with my screen. So my spreadsheet is not working. Okay, let me. So the discount in EOQ, the discount in inventory management is called bulk purchase discount, right? It's called bulk purchase discount, right, guys? Okay. So in the chapter inventory, you have to learn bulk purchase discount. You would have also got bulk purchase discount in your real life. From anywhere, you would have got what bulk purchase discount. So it's also a topic in inventory. And then if you ask me, bulk purchase is nothing but if you are ordering in bulk, you will receive a discount. That is what called bulk purchase discount. Okay. In inventory, it is called bulk purchase discount. There is also a discount regarded to receivable management that we'll be discussing later. Anyway, next one, we do have another important it's a theory only. So what was that theory? One of the most important theory in inventory management. It's a stock management method called, like in my regular classes, I used to tell about the company Rolls-Royce. What was the inventory managing strategy they use? I have discussed it a few seconds
Just
ago.
in time.
In time.
Just in time stock management. Just in time stock management.
Stock.
JIT. Okay, JIT. You definitely have to learn what are the advantage of JIT. JIT is nothing but we are not holding the inventory. Whenever the customer needs, we will get it from the suppliers and we'll make the finished goods and give to our customers. Okay, we are not holding the inventory. That is what called JIT. Rolls-Royce won't make so many Rolls-Royces in their stock. Whenever the customer needs, they will collect from the raw materials from the suppliers. I mean, they will make it to the finished good and sell it to the customer. Okay, thus they don't need any stock. That is what called JIT, just-in-time stock management. Definitely, just-in-time stock management do have some advantages. What are the advantages? It's one of the most tested theory question. What are the advantages of JIT? Please tell me. What are the advantages of JIT?
No deterioration of goods.
Sorry.
Obsolescence of goods. No.
No obsolescence of goods. Goods are not goods won't become obsolete. Okay, which means low wastage only.
Company is not
Low
concerned
or
with
no
price.
holding cost.
No
Yes.
holding cost. Yeah. There won't be any holding cost. As I said, holding cost will be either we can eliminate or we can reduce holding cost. Okay, let me ask you one thing. What will happen to ordering cost in JIT? In JIT,
Increase.
whether ordering cost will
Increases.
increase. Okay, since whenever the customer needs, we'll order from the supplier. So our ordering cost will gonna increase, but our holding cost will gonna reduce, right? That is what JIT. And JIT do have some more advantages. What are they?
Reduces wastage.
Reduces wastage, more quality of goods, customization is possible. Then in holding cost can be reduced, and
Better
above all,
relation with suppliers.
that is not the advantage actually. It's one of the how we can implement JIT. We should keep a good relationship with the suppliers. Okay. Above all that, I can tell you the most important thing is we can invest that capital, invest that holding cost somewhere else, because we don't need a warehouse, right? We don't need a bigger warehouse. We can invest that amount somewhere else. That is what one of the most important advantage of JIT. Okay, JIT is one of the important topics, and you have to learn about stock levels, minimum level, maximum level. What are the stock levels in a company? What do you mean by minimum level? What do you mean by maximum level? Everything you have to learn. What is the equation to calculate minimum level? What is the equation to calculate maximum level? What is reorder level? What is reorder quantity? What is average inventory? Everything you need to learn. Okay. Then on the next chapter called receivable management, everyone, even myself, everyone mistakenly will say it's a chapter of receivables. It's up to 80% it can be correct. For up to 80%, it can be correct, but it's not 100% correct, because it's not only a chapter of receivable management, but also a chapter of payable management. Okay, payable is also an important aspect. Anyway, here you have to learn, in receivable management, you have to learn equivalent annual cost of benefit. There is an equation to calculate equivalent annual cost of benefit, which you need to study. In my normal classes, I start the chapter with the topic equivalent annual cost of benefit. Okay, it's one, you will get a percentage. So that is what being also tested in MCQ questions. Okay, it can also be asked as a 2-mark MCQ question. So you have to learn how to calculate equivalent annual cost of benefit. Okay, there was an equation to calculate equivalent annual cost of benefit. After telling all this, I will definitely discuss equivalent annual cost of benefit equation. I would definitely say the equation. If anyone need, they can write it down. Anyway, so that's it. As I told, in inventory management, there was an discount called bulk purchase discount. Here also, receivable management, there is a discount called dash. That is a
Settlement
discount. Sorry?
Settlement discount.
Settlement discount, early settlement discount. Okay. As a company, we will get what? Early settlement. We will get, if we what? No, we will have to incur, not we get, we will have to incur early settlement discount. We will give discount to our customers and we will collect the money early. Okay, if we will give discount to our customers and we'll try to collect the money early, so that our liquidity problems will be solved. That is what being called early settlement discount. I will tell my customer, a customer, you have, if you pay me earlier, 10 days earlier, I can give you 2% discount. Okay, so why I need to tell that? I need to tell that because my liquidity problem can be solved, right? So in order to solve the liquidity problem, sometimes the company will give early settlement discounts to their customers. Okay, so that is what being early settlement discount. Okay, there is a cost incurred for early settlement discount. That is what called what equivalent annual cost, not EACB actually. Sorry, my mistake. It's EACD, equivalent annual cost of discount, EACD. Okay, so there is early settlement discount. Then for receivable management, you have to learn what are the receivable management method. You have to learn, you have to access the credit worthiness of the customer. You have to set credit limits for the customers. You have to what set the credit limit. You have to monitor this receivable management system. You have to what do many things in order to manage receivables. Okay, for let me discuss about a term called outsourcing. It's a kind of outsourcing in which we outsource to a third company, in which we outsource to a third party, where in order to collect the receivables, the duty to collect the receivables will be outsourced to a third party, and that thing is called dash.
Factoring.
It's called factoring. It's called factoring. Factoring. Factoring is nothing but if you are outsourcing, we are giving our sales ledger and we are asking another company to collect the receivables from our customers. That is what being called factoring. There are 2 types of factoring you have to learn. Which are they?
With the recourse and without recourse.
With recourse and without recourse. With recourse factoring is there and without recourse factoring is there. One among the 2 factoring methods, with recourse and without recourse, we won't incur bad debts. Our company won't incur bad debt. Which one will be that?
Without the
Without
recourse.
recourse.
Without recourse. Without recourse factoring won't have bad debt, right? The bad debt will be incurred by the factor company only. Okay, so you have to learn what are the advantages of factoring and what are the disadvantages of factoring. Okay, factoring do have certain advantages. Factoring do have certain disadvantages. So could you please tell me any advantage of factoring? If you are outsourcing our receivable management, we do have certain what?
This administration cost.
Our administration cost we can save. Then anything else?
Can reduce management controls.
Yeah, we can reduce the controls, management controls, which means we don't have to implement many controls regarding receivable management because we are outsourcing to a third party. Then
Focus on the main business.
okay, we can focus on the main business, right? If you are a startup, we won't have that much skill. And if you are investing time in collecting receivables, it will affect our main business. So at times, if you are outsourcing to a factor, we can focus on our core activities. Okay, we don't need to we don't need time in our receivable management. That will be outsourced. Okay, next one. Anything else? Anything else? Okay, that is what the that's are the advantages of factoring. Factoring do have certain disadvantages also. What are the disadvantages of factoring?
Maybe costlier.
It can be costlier at times, not all times. At times, it can be costlier. If it is without recourse factoring, we need to pay factor fee, more factor fee, right? We have to pay. It's not free. They are not giving a service for free. We will incur a certain cost. It's called factor fee, right? So factor fee will be there. Then
The company's reputation.
yeah, it will affect the company's reputation. At times, when a company is outsourcing its receivable management to a third party, the other party will feel like, oh, this company don't have proper receivable management thing. They're outsourcing everything to other companies. So this company is not good. Investors will think like that. So it will affect the company's reputation. Then
If we are without factoring, then we don't say creditworthiness.
yeah, if it is without factoring, we won't access the creditworthiness of the customers. Okay. The factor will bear the bad debts so that we won't check the creditworthiness of customers. Okay. We'll give it for like without checking creditworthiness. Okay. Really good. It's a good point. Then customers may not wish to deal with, our customers may not wish to deal with the factor. Okay. If a factor comes in, the customer might ask, do we have any connection? No, we don't have any connection. But why should I give money to you? Okay, customers always don't need to, they won't like factors because they don't have any connection with the third party, like, right? So, in factoring, customers may not wish to deal with factor. Okay, for our purpose only, we are approaching the factor. Customers may not wish to deal with the factor. Okay, that is what factoring is. Then, advantage and disadvantages of factoring. Then, you have to learn what do you mean by with recourse factoring and without recourse factoring. So in this chapter, there is actually a big question. In earlier chapter also, inventory management also, there was big questions. And here you have to learn between the current receivable management policy versus there will be a proposed policy. There will be a proposed receivable management policy. It's one of the most difficult question in financial management. Current policy versus proposed policy. There will be two situations in which the company is currently giving early settlement discount. A proposal might come in which we have to tell whether we have to go for factoring or not. So we have to compare the cost of current policy and the proposed policy, and as a financial manager, the one with the least cost should be selected. The one with the least cost should be selected. Okay, that is what being tested in current policy versus proposed policy. And you have to also learn about foreign receivable management. Foreign receivable management. Okay, what are the methods to manage foreign receivable? Could you please name few methods in which we can manage foreign receivables?
Letter of credit.
Yeah, letter of credit. Really good, Yusuf. Letter of credit can be used to manage foreign receivables. Then
Bills of exchange.
yeah, bill of exchange can be used for foreign receivable management. Then anything else?
Forfeiting.
Forfeiting, yeah, it's kind of it's not factoring, it's a different kind of thing. We are approaching some other companies for collecting the receivable from our foreign customers. Okay, it's called forfeiting. It will be always non-recourse. Okay, we don't need to incur bad debt. That is what being called forfeiting. Then
Early
anything else?
payment to suppliers.
No, early payment to collect advance from foreign customers. Okay, then you can use
Forfeiting.
forfeiting. It's already been discussed. Then we can use what? Export insurance. Okay, insurance, we can take insurance. Since we do have foreign receivables, we can take an insurance. But the problem is we cannot get 100% insurance from receivables. We might get around 80%. But the problem is we have to pay a premium for the insurance. Then anything else? Come on, guys.
Counter trading.
Yeah, counter trading. Really good. Counter trading. Counter trading means like a barter system. For any goods or services, we are receiving back what goods or service. That is what being called counter trading. Okay, we are selling something to a company in other country, and that company sells something to us. That is what being called counter trading. We exchange goods or services for goods or service. Okay, so that's also a good method. Anyway, those are the methods for foreign receivable management. And also, I can tell you, there are payable management. Okay, there is EA, equivalent annual benefit of discount. So if it is payable, we will be having benefit of discount, not cost. We will receive discount, right? If it is payable, we will receive discount. If it is receivable, we have to incur discount. It's a cost. And if it is payable, then it is a benefit. So you have to learn what do you mean by equivalent annual benefit, what the annual benefit of discount. And you might have to compare between overdraft also. For our regular students, it will be easy. But if I'm telling this to our to other students, they will think like, what is this guy telling? Okay, you have to learn because it can be tested in session A for 2 marks. For the last 1 or 2 years, it has been tested continuously. EACD and EABD. Okay, so that is what being tested in receivables and payables. Okay, and then cash management. Here you have to learn about the cash motives. What are the motives in which we hold cash? Why should we hold cash? What are the reasons for holding cash?
Daily expenses, day-to-day
Daily
expenses.
day-to-day expenses, like I can tell you, it's transaction motive. For transactions, we need cash, right? Then
Financing,
for financing, we need cash. In financing motive.
investment,
Investment motives. For investing, we need cash. Then
Precautionary.
precautionary. As a precaution, we need to hold cash. So those are the cash motives. So you have to learn what are the cash motives and what are the situations in which you have to hold cash. Okay. So that is what cash motives. And here you also need to discuss about, you also need to understand about cash flow forecast. Okay. Cash flow forecast. Okay. Actually, there's a question called fleet company. In your exam kit, you can get a question called fleet company. It was asked in 2012, I guess. So that question was about cash flow forecast. You have to prepare a cash flow forecast. You have to cash flow forecast will be like this: opening balance, and you have to add all receipts, and you have to deduct all payments. Then you will get the closing balance. This month's closing balance will be next month's opening balance. So they might ask you to calculate the closing balance after 3 months. Okay, then you have to prepare a table and you have to calculate the closing balance after 3 months. That is what being tested in cash flow forecast. And there are two theories named after certain scientists. Okay, there was few scientists there what developed certain theories called, what are the theories? Models, I would say. Two models you have to learn in working capital.
Bowman's model.
Baumol's model. Yeah, very good. Baumol's model. Baumol's model is
Miller or
nothing.
model.
Miller or model. Baumol's model is based on
Transaction cost, EOQ.
it's based on EOQ. Baumol's model is based on EOQ only, economic order quantity. It's a similar kind of equation like EOQ. And okay, I will discuss it further. Anyway, it's based upon the EOQ only. Baumol's model is actually being derived from the EOQ equation. Okay, then you have to learn about the Miller or model. About the Miller or model, where you have to learn. Have you seen the equation to calculate spread? There is an equation to calculate spread in your formula sheet. In your formula sheet, there is an equation to calculate spread. That spread is being calculated in Miller or model. Okay, so Miller or model, you might have to find lower level, upper level, and return point, spread, everything you have to calculate in Miller or model. So it's being developed from our stock levels. Okay, Miller or model is actually developed from the stock levels. Okay, anyway, those are the things that you have to learn in Miller or model. And you have to also learn about treasury management. There are two kinds of treasury management. Which are they? There are two kinds of treasury management. Which are the two kinds of treasury management?
Centralized and decentralized.
Yeah, centralized treasury management and decentralized treasury management. Okay, treasury management, you have to learn which are the two types that are being centralized and decentralized. Okay, centralized and decentralized treasury management. You have to learn the difference between centralized and decentralized. So in which method, either in centralized treasury management or decentralized treasury management, in which method we can actually reduce foreign exchange risk? In a company, we can reduce foreign exchange risk in one among centralized or decentralized method. Which one should be?
Centralized.
Centralized treasury management, right? Centralized treasury management is nothing but it's a kind of treasury management. Suppose X company is the parent company and it do have certain subsidiary companies or certain branches called A, B, C, D, E, and all the cash management, treasury management of the entire company. Okay, it's a single company, right? It's a branch and it's an head office called X, and the X is being managing the treasury department of all other branches. Then that is what called centralized treasury management, right? Here there won't be greater autonomy. Autonomy means independence. If it is decentralized, then A company will manage its treasury of its own. B will manage its treasury of its own. C will manage its treasury of its own, and everyone gonna manage its treasury of its own. If it is centralized, then it's easy to it's easy to manage foreign exchange risk. Okay, because a single company is paying the customers or paying the suppliers or receiving cash from the suppliers. It's a centralized system, so it's easy to reduce foreign exchange risk, right? Okay, so that is what being discussed in centralized treasury management and decentralized treasury management. Each company will have greater autonomy in decentralized treasury management. Okay, so let's discuss about EOQ. So can anyone tell me what was the equation to calculate EOQ? What was the equation to calculate EOQ, economic order quantity?
Under root of 2AC by CH.
Yeah, we do have a certain different equation. No problem. For It's actually correct, but I can give you a different equation. It's root 2 COD by CH. Okay, you can tell any letter, no problem. The equation has to be correct. Root 2 COD by CH, where CO means cost of ordering, D means annual demand, CH means cost of holding one inventory for 1 year. You will get EOQ. And what will be the unit of EOQ? You'll get an answer. What will be the unit? It will be units only. Unit will be units only, number of units. EOQ will be discussed in number of units. Okay, how much units you have to order in a single order. That is what EOQ, right? That is what being discussed in EOQ. Anyway, I can give you few questions. I can give you few questions which are important in working capital. Important questions. So you have to note down the important questions from working capital. You have to do those questions before going for your exam. Okay. It's a mandate, must do questions. First of all, the first question I would say will be Pumi's company. Pumi's company. Okay, Pumi's company. It's an important question. It's a question based upon working capital, investment policy, and financing policy. Okay. Then I can tell you, someone is asking something. Okay, Pumi's company. It's an important question. Then I can tell you, Candy company. Candy company. It's an important question. Candy company. Purdy company. Purdy company. Purdy company. You have to do all these. Okay, Candy, Purdy, then WQZ company. WQZ company. Oscar company. Oscar company. Oscar company. Then Guillermo company. Guillermo company. And it's the latest question, Guillermo. And the most latest question will be Grow company. GRO company. GRO company. Grow company. Then I can give you Fleet company. This is not so important. Anyway, you have to learn because it's a question of cash flow forecast. Fleet company. Okay, you can do all these 9 questions. You should do all the 8 questions before going for your exam. So these are the important questions. Please take the notes. And let's discuss about some theory question which can be tested from from working capital management. Few theory questions. Okay, what are the important theory questions? Okay, so these are nothing but I'm telling all this with my experience only. I'm telling all this with my experience only. Okay, so I can give you few theory questions which you need to learn before going for your exam. Okay, the most important theory question will be working capital investment policy and working capital financing policy. Investment policy and financing policy. One of the most important theory question. Then I would say, what are the advantages of JIT? What are the advantages of just-in-time stock management? What are the advantages of just-in-time stock management? What are the advantages and disadvantages of factoring? Advantages and disadvantages of factoring. Okay, what are the receivable management methods? Receivable, what are the methods in which you can manage receivables? Okay, receivable management methods. Then I would say, then what are the symptoms of overtrading? It cannot be asked as a theory, but it can ask, they can ask as in order to calculate some ratios, and you have to interpret that ratios concerning the symptoms of overtrading. Symptoms of overtrading. So you have to learn what are the symptoms of overtrading in a company. Okay. Then working capital. Okay. Then profitability versus liquidity. What is the connection between objective of profitability and objective of liquidity? Do we need profitability alone? No, we also need liquidity also. So we cannot keep so much working capital, which will affect our profitability since we are taking working capital as loans from banks. But we cannot keep working capital low since we do need liquidity. So that is what being profitability versus liquidity. And you have to tell the connection between working capital, investment in working capital, and cash operating cycle. And if you ask me one more question, I would say we told about factoring. I would say it will be treasury management. Will be centralized. We have to discuss the difference between centralized and decentralized treasury management. Okay. So these are the important theory questions from working capital. Important theory questions from working capital. If you can learn all these, I can assure you that you will get good marks. You may not get full marks. I cannot assure you full marks since you are not my regular students. But I can assure you that you will get more marks. Okay. You will get more marks. So that's it. So anyone do have any query, any questions?
Sir, can you say about that invoice discounting?
Oh, sorry. I have forgot it actually. It's an important method, invoice discounting. It has to be here. Really, thank you. Since I'm also a human being, I can also make mistakes. It's being in receivable management. You have to learn one more thing called what? It has to be somewhere here. It has to be somewhere here. Invoice discounting. Invoice discounting is nothing but like pledging our invoices. Okay. We can pledge our invoice. We can show our invoice to our customers, to the bank, and we can tell that the bank that we will get this much money on this date. Could you please give me a loan based on this receivable? Okay. Then we will get the money from the bank, and when we receive the cash from our customers, we'll repay that loan. Right? It's nothing but we are pledging our invoices. That is what invoice discounting. We may not get 100%. We will get around 80% of the receivables from bank by showing our invoice. That is what being called invoice discounting. It's not invoicing, invoice discounting. Invoice discounting, right? Am I right? Are you
Yes,
getting
sir.
me?
Yes, sir.
Yes, fine, good. Then any more questions?
And sir, that undercapitalization and overcapitalization.
Yeah, undercapitalization. Pingani, could you please unmute? Sorry, could you please mute? I'm having some background noises. Overcapitalization is nothing but the word itself will give you an idea. Overcapitalization, which means we are investing more in working capital. If we invest more in working capital, it will affect our profitability, right? It will affect our profitability because we have to pay more interest. That is what being called overcapitalization. Undercapitalization means we are investing less in working capital, which is also known as overtrading. Overtrading is also known as undercapitalization. Okay, so it's a good question. Anything else?
Sir,
Hmm.
so,
Oh.
sir, is this C-type questions covers all variety of questions
Sorry?
in working capital? Is this 8 C-type questions cover all variety of questions in working capital?
Yeah, I have discussed here 8 questions, right? These are the most important question. Okay, I cannot tell the whole thing is being. This is the most important question. Most probably one among this should be tested. Most probably one among this should be tested, but I cannot 100% give an assure because there are few certain areas where they can ask from, like they can ask about cash motives. Sometimes they can even ask about the advantage, the assumptions related to EOQ. Anything they can ask, but this is the most important question. At least you have to learn this. At least you have to learn this much questions before going for your exam. Okay, you can ask in Malayalam also, no problem. Okay. മലയാളത്തിൽ വേണമെങ്കിൽ ചോദിക്കട്ടോ. എന്തെങ്കിലും ഡൗട്ട് ഉണ്ടെങ്കിൽ മലയാളത്തിലും ചോദിച്ചോ, പ്രശ്നമില്ല. ഇറ്റ്സ് നോട്ട് എ പ്രോബ്ലം. ഇനി തിരുവനന്തപുരംകാർ പറയുന്നുണ്ട്, തിരുവനന്തപുരത്തുള്ളവർക്ക് എന്ത് ചെയ്യാം, തിരുവനന്തപുരം ഭാഷയിലൊക്കെ ചോദിക്കാം, നോ പ്രോബ്ലം. Okay, anyone do have any questions?
Sir, to prepare cash budget, it may ask.
Yeah, cash flow forecast can be tested, but since my experience, cash forecast or cash budget is rarely tested. Okay, in 2012, after 2012, only tested 1 or 2 times. Okay, yeah, you can do fleet company. It's a perfect question for cash forecast, cash flow forecast. Practice fleet company. But remember, you can normally what they do is they will ask a cash flow forecast question in the mock exam. But in main exam, cash flow forecast questions are rarely tested. Yeah, I cannot tell you it won't be tested, but it is rarely tested only. Okay, any more questions? Anyone can ask. Please don't hesitate to ask, since we are running short of time. Every day we are approaching, day by day we are approaching closer to the exam. Do you have any more queries? Any more questions? The more questions you ask, the more idea you will get. Anyone?
Sir, you were saying about that EACD question.
Yeah, I was saying about EACD question. Since EACD is least likely to be tested in session C, you can expect an MCQ question from EACD. Okay, EACD. The full form of EACD is nothing but equivalent annual cost of discount. Okay, I can explain it in EACD. Wait, I can explain it a bit, not the whole thing. I can explain what I mean by EACD. Right? Suppose normally we give receivable days of 40 days. Okay, credit of 40 days. Suppose since I am the financial manager, I might tell that if you pay me in 30 days, I will give you 1% discount. Okay, I will give you 1% discount, which means I have to incur a cost of 1% if I can collect the cash if they are ready to pay in 30 days, right? This 1% is a cost, but it's not a cost that is incurred over a year. It's a cost that is incurred in in a period of 30-40 days, right? So what will be the cost we will incur over a year? That is what being discussed as EACD. EACD. Okay. EACD, which means equivalent annual cost of discount. 1% in 40 days. So in 12 months or else in a year, what will be the cost? So in order to calculate that EACD, we do have an equation. That equation is called 1 plus discount divided by amount likely to pay raised to n minus 1. Okay, this is the equation to calculate EACD, not EACQ, EACD. Okay, you will get a percentage. That percentage is the annual cost of giving discount. If you are giving discount, which means we have to incur a cost, right? I am the one who bear a cost. That is what called EACD. Suppose our EACD is 10%, which means we will do incur 10% cost if we give discount. Okay, we will do incur 10% cost if we give discount. That is what EACD. EACD should be compared with overdraft percentage. If EACD is more than overdraft percentage, then we should not give discount. Rather, we can take overdrafts. Okay. This is being explained widely to our normal students. Since you are not our normal students, since this is only a short-term revision session, I cannot explain the whole thing. I can give you an idea of the whole thing in a much more simple way. Okay. Don't think this is the whole thing. The whole thing is much more wider. I can explain everything if you are my regular student. Now I am not in a position to explain everything. I don't have enough time. Okay, I'm running short of time. So that is what EACD is. Did you get me, Yusuf?
Yes, sir. So, sir, this overdraft is for yearly or it was
Yeah,
short-term?
overdraft should be for yearly overdraft interest rate. The percentage in not yearly, the percentage of interest that should be paid to overdraft yearly. Overdraft interest rate. You have to compare both overdraft interest rate and EACD. Then only you can give discount. Okay. Anything else?
Sir, can you say the last thing, this treasury management, role of treasurer in short form?
Yeah, treasury. You can expect two types of treasury management. One is centralized treasury management and one is decentralized treasury management. Okay. So, for example, a central authority called X, it's only an example, called X is being managing the treasury departments of all other branches. Okay, all other branches. Then it is called, everything comes under the central authority. Then it is called centralized treasury management. Every treasury management thing, the whole treasury management thing is controlled by a central authority. Then it is known as centralized treasury management. If the whole treasury management is being managed by each zones or each branches, like A is managing its own treasury, B is managing its own treasury, C is managing its own treasury, everyone is managing their own treasury, then it is known as decentralized treasury management. Okay, both of them do have their own advantages and disadvantages. Each branch of a company will get greater autonomy if it is decentralized. Okay, if it is centralized, they can arrange the amount in bulk. They can also reduce foreign exchange risk, everything. There are advantages for both methods. Okay, centralized treasury management and decentralized treasury management.
So, sir, in exam, we have to write both advantages, disadvantages of both.
No, they might ask us to tell the difference between centralized treasury management and decentralized treasury management. But you have to learn, in order to tell about both methods, you have to learn what their advantages and disadvantages. Okay, anything else, Yusuf?
So, sir, this treasury management, they all do that only investment things. The role of
No, everything, not only investment, the entire treasury, the cash management will be borne by the central authority if it is a centralized treasury management. The entire treasury department, not only investment, it can be financing, it can be investment, it can be holding, everything. Okay, next question. Anyone do have any questions?
Sir, can you say that about TQM, total quality management?
Total quality management is not an important question from working capital. It's not being tested in working capital.
Because it was like JIT versus TQM in study text.
Which study text? I don't think TQM will be tested. It's like an out of syllabus thing. Okay, did you find it in your study hub?
Yes, somewhere I saw that.
Yeah, TQM won't be tested. JIT should be tested, can be tested. JIT can be tested, but I cannot assure you JIT also. JIT can be tested. It's most likely to be tested. Okay, anything else? Anything else? So if you don't have any more questions, let's wind up here. So I hope everyone liked our session, and hopefully we can do further questions on our coming days. Not further questions, further sessions on our coming days. Most probably after 2 days we will conduct business finance. Similarly, we will conduct business finance. Okay. And did you find it helpful? Are you finding our classes helpful?
Yes, sir, 100%.
Okay, fine. Anyway, inshallah, we will conduct better classes on the coming days. Hope you had a wonderful class, and all the best for your exam. Do well. Thank you.
Thank you, sir.
Thank you.